And then we can wait a few minutes for others to join.
Could have got my background to look like yours. I'm gonna try to figure out with our IT team how do we get this to work? Because I just like
Yeah.
that style for
Yeah, because
future
you can just
reference, future.
capture everything there. Yeah. I'm sure it's probably an easy fix.
Even on like internal meetings too. Meeting a bunch of new people. It's people always ask like, how do I get in touch with you? It's like there it is.
Right there. Yep. Yep. Like a minute to 12. I'm just gonna wait just a little bit. Yep. Give people some time. It's like 12 o'clock on the dot right now. Maybe we'll wait like a minute to let people in. Are you able to see the attendee list, Eric, or no?
Uh, like who's coming in now? I can't see anything.
Can't see it. Okay. And maybe because I'm the host. Just give it a few seconds more to see if anybody else comes in. Okay. Well, we can go ahead and get started. And for those who join after, of course, there's going to be a recording after that we're going to circulate. So we will get started just in the interest of time and ensuring that we stay on schedule. So thank you everyone who is here on the call with us today to join our webinar. Today, myself and I'm Anthonia Berry and Eric Reynolds. We're going to co-host this webinar on IOLTA Accounts Made Simple. We're going to talk a little bit about how to establish your IOLTA accounts confidently and answer any questions at the end that you may have. Also, before we get started, just wanted to make a point to mention here that the information that is being shared here on this webinar is not legal advice. It is for educational and knowledge purposes only. In the event that you have any questions that are specific to your state and applicable to the law in your state, we highly recommend that you contact the local state bar in your respective state, and as well as an attorney who is licensed in the state that you're in to provide you with any legal advice along the lines of your questions that you may have. Also, as mentioned before, we are going to have a Q&A at the end in the event that you have questions. We've also provided our contact details here on the screen in front of you. You're welcome to take a screenshot of that. It will be again presented at the end. And as I mentioned before, we are going to circulate the recording of this webinar so you can capture it then as well. Just to cover the objectives of this webinar so that you know what to expect. In the webinar, we're going to talk about the understanding of IOLTA, its purposes and its functionality. We're going to touch on how to establish them properly. Also looking at the compliance requirements, ethical considerations, as well as alternatives. And lastly, we're going to cover the day-to-day management and record keeping best practices. And just to give you an overview of what the agenda is going to be in a little bit more detail, we're going to welcome you, of course, to the webinar, give brief introductions of ourselves, talk about the understanding of IOLTA onboarding and the setup process, compliance requirements and ethical considerations. And as mentioned before, the day-to-day management of IOLTAs, best practices for record keeping and transparency. And then we're going to provide some practical tips followed by a Q&A. As mentioned before, my name is Anthonia Berry. I am the CEO of Strategy Academy. At Strategy Academy, we are law firm business developers. That's what our agency focuses on. We work with law firms to establish them from the ground up. And perhaps if they are already established and needing to level up to perhaps whatever that looks like for the practice to develop to increasing their revenue, taking on new ventures. Perhaps they might be doing an M&A. We're there to support and work with attorneys in that capacity. As mentioned before, I am the CEO and a business developer, so I head up this agency. There are a couple of other creative team members that make up the team, and we all collectively work together to serve attorneys. I've been in the industry for about 2 decades now, working with law practices internationally as well as nationally here in the United States. And our offerings are tailored to each and every client that we work with. And the strategic goal is always to move towards growth. I am also the creator and host of a signature program called the Practice Blueprint program, which I am also going to talk a little bit about here. This program is for attorneys that are at the very start of launching their own law practice. This signature program is a proven system and roadmap for attorneys that are seriously considering opening their law practice. It is a self-paced program, but we will go with you for every step of the way, and we will go at your speed. Along with the program, they're going to be accompanying coaching sessions that are one-on-one with attorneys who are working on the process to launch their law practices. This is an executed focus program to help attorneys to move from the idea stage into the action stage and then straight into launching. The program lays the foundation to set attorneys free from the billable hamster wheel. That's entirely what this program is about, to get them to the place that they're happy in their practice, happy practicing law, and not wanting to exit the profession because they're perhaps a part of a bigger law firm that is just burning them out. This program actively builds the framework for a new law practice. So if any of this describes where you're at and perhaps you might be considering launching your law practice, I would encourage you to book a consultation. It is a confidential conversation with us so that we can see where you're at and to see where you can go from here. To the right, you will see that there are 2 QR codes. The first one is going to take you to a page that's going to give you details about the program. The second QR code is going to allow you to schedule a confidential conversation with us so that we're able to go over where you're at with launching your law practice to see if perhaps this is a good fit for you and whether or not this is a time for you to even make that jump into owning your own law practice. So if you are an attorney who's considering ownership at this point, like seriously considering it, we would love to speak with you. There's no obligation if you book that consultation with us. We like to see where you're at to support you into making that transition if that's where you're at. And now I'm going to introduce Eric. Eric is from Pinnacle Financial Partners, and I am going to pass it over to him so that he can talk a little bit about Pinnacle Financial.
Yeah, I appreciate that, Anthonia, and good morning or good afternoon to all of you who are on the call, depending on where you're joining from. As she said, I'm Eric Reynolds. I'm a financial advisor with Pinnacle Financial Partners. If you're unfamiliar with Pinnacle, we are a full-service bank. So by full service, what I mean by that is we offer everything you can imagine, from all of your commercial banking needs to your wealth management and private banking needs to more of the ancillary services like retirement, employee benefits, captive insurance, things a little bit more unique as well. Our bank HQ is Nashville, Tennessee, and from a physical footprint standpoint, we are all up and down the Mid-Atlantic into the Southeast. I sit in Atlanta, and there's a lot about Pinnacle that makes us a lot like a traditional bank, but there's a lot about Pinnacle that makes us more like an untraditional bank in a good way. Some of those things that make us more distinctive and why people choose to switch their banking to Pinnacle or perhaps remain with us. So what I'll tell you is it starts with people first and foremost. We only hire really exceptional bankers. And something that's a little bit unique about Pinnacle is, again, we are a publicly traded bank, publicly traded company. However, we very much function like a private bank, even from the way that we recruit talent. So we very much have a nomination process for how anybody at Pinnacle, regardless of what your role is, gets invited into the firm. Kind of probably similar to how many of the law firms that are on the call, how you might function as well. And when it comes to recruiting, we only hire people that have 10 years of experience or more. So you can rest assured that anybody that you'd be working with, again, from the teller to your advisor to the C-suite at our bank, everybody has 10 years of experience or more. Just that all kind of leads to quicker decision making and better decisions as well. When it comes to retention, on average, we retain 95% of our associates in any given year. So I know something that's kind of pretty common in the banking world these days is kind of seeing you've had this banker for 12 months or 24 months, and before you know it, they've up and left and they didn't contact you. That really does not happen here. We retain, again, 95% of our associates in any given year. And then I think something that really kind of makes us very unique is just speed to market, right? Whether it's opening deposit accounts, which we'll be talking a lot about today, or if it's more on the lending side, really any service or piece of advice you may need, you'll find that at Pinnacle, our decision making is very fast. A lot of the advisors we hire, we are empowered to make decisions on our own, as opposed to having to go through layers upon layers of management to get approvals for certain rates or things like that. That all is done through the advisor, and better yet, it's done locally. There aren't decentralized teams that are more common at bigger banks. Again, you'll just basically find that everything at Pinnacle, I like to say that we're like the Chick-fil-A of banking, if that resonates well with people that are based in the Southeast. And a lot of this distinctive service, it's not just words on a page. Every year, we back this up with awards that we receive directly from clients we service and peers of ours as well. So, every year there's this company called Greenwich, who you can kind of think of them as a third party, similar to like a Thomson Reuters, where they survey tens of thousands of small businesses and middle market companies each year based on their banking services, right? Like, do you like your current bank? Who is your bank today? What would you rate them on certain scales? I am happy to say that in 2025, we at Pinnacle were the #1 or best bank in the nation for small and mid-sized companies. So that's something that we love to share with any clients or prospects of ours. Again, I just share that with you to say that a lot of the distinctive service I just mentioned, it's not just something we say, it's something we live by, and it's something that our clients feel when they're brought in the door. Now, some big news this year for us at Pinnacle is, maybe you haven't heard of Pinnacle, but perhaps you've heard of Synovus, who we actually just merged with, and the merger just went through back on January 1st this year. It was announced back in July of 2025. It was approved by the Fed in November, and then ultimately we've effectively merged as of January 1st. So if by chance you're on this call and you know Synovus, that's great. Since you know Synovus, you now know Pinnacle. If by chance you're a Synovus client and you're on this call, you can rest assured that there are no major changes happening to you. You can rest assured that your current advisor will remain your advisor. And really this merger, you can kind of see from a footprint standpoint, it's great for us. We were more predominantly based in Tennessee and the Carolinas. Synovus having a heavy presence, Georgia, Alabama, and Florida. From a footprint standpoint, it opens up a lot of doors. Maybe there's more of an overlap with your law firm via the merger with us now. And one of the fun things to share about their bank too is I mentioned on the previous slide that we were named the best bank in the country by Greenwich. Synovus was #2. So we didn't just inherit a bank that's great from a banking aspect, from a culture aspect, and from just the way that they approach serving their clients. We are very much one and the same. Now, a little bit more about myself and team and what we specifically do. I mentioned on the front of the call that I'm with what we call the legal specialty team here at Pinnacle. And as the name would suggest, that means that myself and team have the blessing and the curse of working predominantly with the legal profession, both law firms and attorneys. Not just your more traditional corporate law firms that bill by the hour, but also the other side of the bench being the contingency law firms and professionals, PI attorneys, class actions, and mass torts. With any of these law firms, what we like to do is come in and handle all the commercial banking needs of the firm and simultaneously handle all the wealth management needs, private banking needs of all the attorneys, staff, and C-suite of that same firm. So I like to say that what we effectively do for firms is really translate the bottom line of the firm's financials to the personal wallets of all the attorneys, of all the staff, recognizing that law firms are not a widget business, right? Like, the money you make directly translates to what goes into your associates' pockets. We have a very unique understanding of the industry. Certainly, there's a lot of commercial banking advice and services, everything from treasury, capital markets, financing and capital, risk management that we offer. On the wealth management side, certainly we offer everything you could come to think from checking accounts, tailored lending accounts, like partner capital loan programs, partner or associates that are making that jump to partner. You need to finance that capital injection, or maybe need to refinance that capital injection if coming from another firm. We can set up programs with you to do that. We have tailored mortgage services. And then, where I really think we had a lot of value is just from an industry knowledge aspect. Like oftentimes law firms come to us to ask us questions from more of a consultative aspect of, it's common to hear like, hey, what are peers of mine doing that I'm not, right? Like, what should I be doing better? How are law firms using AI? If we were ever to consider a merger, how should we approach that? How do we value our capital accounts? How do we retain talent? So I share all that with you to say we're not just coming in and trying to be your bank. We really are trying to come in and be your advisor and help you grow or sustain growth for your firm as well.
Thank you so much for that, Eric. Now we are going to get into the details of our webinar, the meat and potatoes of things. But before we get started in the detail and into the details, I just wanted to mention here that we have intentionally put a lot of reminders in this content, and the reminders are for you to really, really remember to stress these points that we're making to your internal staff and also to memory as well, because of how important it is for you to take note of these very key things that you need to know about IOLTA accounts to ensure that you're always in compliance. Now I'm going to hand it over to Eric so that he can start talking with us about understanding IOLTA accounts.
Yeah, thank you. So IOLTAs, right? The reason why we're here on this webinar, it's a funny topic. Obviously, I just mentioned on the previous slide, there's a lot that myself and team do when it comes to banking, law firms, and attorneys. But these types of accounts, of course, are ones that we set up for any given law firm because you certainly have to have them, right? So a little bit of a history lesson on IOLTA. The concept of IOLTA has been around for decades upon decades. The name really only kind of started back in the late 1970s or 1980s. Prior to officially being given a name, attorneys and law firms were always allowed to pool client funds into non-interest bearing accounts. The reason why they were non-interest bearing, long story short, coming out of Red Q in the 1930s, the government basically stepped in and they did not allow banks to charge commercial interest on commercial checking accounts. I think there was a bit of a bank war going on there, and they thought it just wouldn't be a good idea to allow that. But then started to ease up a little bit in the late 70s and 80s. But what that meant was, well, now that banks can begin allotting interest on these checking accounts commercially, well, everyone on this call as an attorney knows, and we'll certainly get into the details on this, is attorneys are not allowed to earn interest on what is deemed client funds. Thus, the name interest on lawyers' trust accounts. IOLTA, if you're in New York, it's called IOLA, means the exact same thing. I think that New York attorneys, just being the law capital of the world, like to have a different name and stand out a little bit, I guess. But, really these accounts were purposely set up as accounts where the interest that is incurred on that commercial checking account, it's not going to go to the attorneys. It's also not going to go to any of the plaintiffs as well. But the condition is that all the interest is earned on that account. It's going to benefit local jurisdictions, local charities, things of that nature, right? So, when we're kind of hitting on why do you need IOLTAs, why do they exist? That's why we all know as attorneys, we'll get into this more, that you cannot commingle attorney funds with what seem to be client funds. And opening up a separate account, at least back in the 80s, was a little bit cumbersome having to do so for each one of your clients. So instead, we set up these special accounts where you could pool client funds, and any of the interests earned will ultimately go to who they ultimately benefit, being local jurisdictions and local charities. So you haven't guessed by now who needs an IOLTA. The answer is you. Okay, so all 50 states have established IOLTA programs by their respective state bars, and there is mandatory participation in 46 of those 50 states. So I'm going to be willing to guess that everybody on this call, you likely need a IOLTA, and not only do you need one, you are required to use it. There are 4 states where you can, I believe, write into the state bar and effectively opt out of the IOLTA program. Those 4 states are Alaska, Kansas, Nebraska, and Wyoming. So we've talked about, why do you need them? Who do they benefit and who needs them? Obviously, the answer today is likely all of you that are on this call. So how do I get one, right? Like, how do I effectively choose a bank? And, I think one kind of common misconception is you can just walk down the street to any bank or maybe even the bank that you're already with and just ask them to open a IOLTA and they'll do it for you. It's really actually not that simple. You cannot open a IOLTA at just any bank. You are required to open a IOLTA at a financial institution that has actually been approved by the state bar. So even if the bank is perhaps, domiciled in your state, or they have branches that are in their state, or you already bank with them and you're in your respective state, that doesn't actually mean that the bank is approved by the state bar to open IOLTA accounts. So what a bank actually has to do is actually effectively apply and sign an agreement with the state bar. And what that agreement says is, hey, we are going to abide by IOLTA rules, being special reporting that we'll get into on a couple of slides later, as well as just general oversight of IOLTA as well. So every state bar, if you're kind of wondering, well, how do I know if my bank, separate from calling different banks, asking if they offer this, how do I find a bank that offers one? The good news is you go out to your respective state bar website. Every state bar maintains and they regularly update a list of financial institutions that meet the compliance and reporting rules surrounding, what we call trust accounting and IOLTA administration. And if you happen to be in Georgia, for your benefit, one thing I did at the bottom left hand of the screen was I just posted where you can find not just the Georgia rules of professional conduct, rule 1.15, 1, 2, and 3. What they both basically hit on for you is, as an attorney, all of your requirements when it comes to avoiding commingling, mixing, your funds with client funds, all the best practices and what the rules are around that. But the other link is also all the currently approved financial institutions in Georgia as of this month that offer IOLTA programs. So now, when you're looking at a bank and you're kind of wondering, okay, that's great. Eric, you're kind of telling me there's a lot of reporting that goes into maintaining and managing my IOLTA and making sure I'm not commingling funds. What kind of reporting is the bank going to provide me, right? So what you can expect is really all the same reporting that you would see from your operating account at any given law firm. So you're going to get all the monthly statement activity, and then also what the bank's going to do on your behalf is every single month or maybe quarterly. It depends on your respective state bar. You don't have to contact us and say, hey, the interest is ready to go to the state bar. You don't have to submit it like an ACH or a wire. We handle all of that for you. Okay, so we coordinate with the state bar how much interest was accrued in any given month or quarter, and we pass that through to the bar. There's no need for you to have to reach out to us and actually have us do that on your behalf. And then when it comes to the statement activity that I mentioned, again, it's going to be very standard. It's going to be everything from all the inflows and from various accounts to showing you all the outflows to the outside accounts as well. Now, going back to the signed agreement that I mentioned that we have with any state bar, part of that agreement means we are required to report your overdraft or insufficient funds activity on your IOLTA account to the Board of Professional Responsibility, meaning, and I know that Anthonia is going to kind of get into this a little bit later, more best practices, how to avoid this, but when it comes to your client funds, you never want to see your IOLTA account get below zero. If it ever drops below zero, that's not a good thing. And one of the other best practices is also going to be make sure before you go to send client funds to your client or make any payments on behalf of your client to any third parties, make sure that the funds that are your client's funds have been collected and show as collected within your bank account as well. The issue would be if they haven't been collected, and what collected means in the eyes of myself and the bank is that they have passed through the sending bank and they have cleared us as a bank as well. The funds have settled, they're there. There is no float period that's going on. If you send funds prior to that, technically what has happened is you've actually just used another client's funds to make that payment on behalf of your other clients. So again, we'll get in more into that, how to avoid that later on, but just another best practice tip to be considering as you're thinking about bank reporting and what you see when you log into your online banking in terms of available funds versus collected funds. When it comes to fees on IOLTAs, I'll kind of pause for a second and say, like, look, every bank is different. It is common practice or common courtesy for banks to waive the common service fees you would have on any other types of accounts like wire fees or ACH fees or just monthly statement fees, things of that nature. I can speak on behalf of Pinnacle and say we do all of that. We do not charge fees for IOLTAs, but that's not to say that other banks, perhaps they may not be waiving all those same fees as well. So because of that, if you find out that fees are to be charged, a best practice is to set up a separate account in the name of your firm using firm money, where the bank can then auto debit whatever the monthly fees are going to be from that account as opposed to the IOLTA account. That way the fees are coming out of firm money versus the IOLTA account money. Now, some jurisdictions, it varies by state bar, do allow firms to actually take their firm money. Instead of setting up a separate account, you can place a nominal amount of firm money into the IOLTA, say maybe 100 or 200 bucks a month, to cover those fees and directly pay fees from the IOLTA. So kind of saving you a step, so to speak, of having to open up that separate account if you didn't want to. Again, check with your local state bar. They'll have the rules. It varies by the jurisdiction, but in some states, what they allow you to do is, again, put in a nominal amount of firm money so you can cover the monthly fees charged to the IOLTA. And then even some jurisdictions, this is a little bit less common practice. Again, I'd contact your state bar. They'll allow you to take the interest that has accrued, whether it's monthly or quarterly, on the IOLTA and use that interest to pay the monthly service fees as well. So now, we've talked about what are IOLTAs. We've talked about how do I find a bank, what type of reporting am I going to get? The next best question is obviously when it comes to documentation, how do I actually open the account with my respective bank? So the answer is largely the documentation needed is really all the same you would commonly have to open up any type of account in the name of your firm, or maybe in the name of yourself if you're a sole practitioner, so to speak. But common law firm documents are going to be articles of incorporation, the EIN for your firm being your tax ID, Secretary of State registration, and likely an operating agreement that showcases the ownership of your law firm as well. The other thing you're going to have to do is provide who are the authorized signers on the account. So this is another one where check with your state bar, because it does vary by the jurisdictions, as a lot of things do when it comes to the management of these types of accounts. But authorized signers of accounts effectively means you are an owner of that account. So I know there's a bit of a gray area these days sometimes when it comes to non-attorneys owning law firms and stuff like that, and the state bar have started to pick up on that as well. But check with your state bar on their requirements for if attorneys only are allowed to be an authorized signer on the IOLTA, or if perhaps someone who is a part of the law firm but is not licensed, if they're allowed to be a signer on that account as well. But when it comes to getting the signer set up, the documentation is going to be usually copy of your driver's license, your social security number, email, and cell phone. And the last thing that you're going to need to do, and this is something that certainly we at Pinnacle, we know to do all of this and we have all the documentation needed, but the last thing you're going to need to do is make sure that when it comes to the interest remittance that's going to occur monthly or quarterly, that tax ID and the account number for the funds to go to needs to be the state bars, of course, because again, the interest that's earned on the IOLTA, it cannot benefit yourself as attorneys. It's not going to be passed through to the pool clients. It's going to go to the state bar and their charitable foundation. Your bank should know this. We at Pinnacle, we certainly know this. It's not something we ask you to provide us. We have records with all the states that we are approved in of what their state bar account number is and what the EIN number is as well. And I think, Anthonia, maybe on the next slide or the slide before, one thing I want to point out also was there's a map of where at Pinnacle we are approved for respective states within their state bars to have IOLTA accounts. What I can tell you is we are approved in about 30 of 50 states presently. Again, going back to what I said kind of at the beginning, where just because your bank maybe has a branch or an office in that state, that doesn't actually mean that they are approved by your state. Again, they do have to file and follow all the procedures in doing so, but we are approved in 30 of the 50 states. And, if you ever see a state that you're like, hey, Eric, Pinnacle, you're not approved in it, we really need that. What I can tell you is we are very fast when it comes to filing. Like, for instance, Missouri is one state that we're currently not approved in. However, we had a client come to us the other day saying they needed a IOLTA account set up in Missouri. And within a week's time, we filed and we expect to hear back probably in the next week and get that account set up and established here shortly. The last thing I'll touch on when it comes to setting up IOLTAs is how do I title the account, right? And this seems like it's the most obvious, but it's also the most important step as well. And what it really means is that it's very important that you title the account to showcase that it is a trust account. It is a IOLTA account, right? That way, all involved firms, attorneys, third parties, they are aware of its purpose to hold client funds. Nobody's going to go into your online banking looking to move funds around, and they don't seem to recognize that maybe this is the operating account or a savings account or a payroll account. You want to make it very clear that this is the trust account for the law firm. So much so that it actually is, again, it varies by the jurisdiction, but it is common practice for the bar to require specific language in the account title. Different bars may say you need to label it trust account or escrow account or IOLTA account, or I think some bars even say it could be the fiduciary account. Just any kind of nomenclature that distinguishes it from your normal day-to-day operating firm accounts as well. So talk a lot about, again, what are IOLTAs? Why do we need them? What purpose do they serve? How do we open them? How do I effectively choose the right bank to open them and title them? Well, the last thing is, okay, once they're open, what are some kind of key compliance considerations and ethical considerations to make sure that we don't slip up when it comes to managing trust accounts, right? It's like I said, it's funny how they're mandatory, you need them, but at the same time, they also can lead to significant penalties, even disbarment, or, at minimum, a bit of a black eye on the law firm in your eyes to the state bar if you mismanage funds. So first and foremost, you're going to hear this a lot today. The number one rule here is no commingling, okay? And that basically just means all client and client related third-party funds must go directly into the trust account and remain separate until they are to be paid out. So never place client funds directly into your operating account until they are earned, or per a settlement agreement, they are to be dispersed to yourself and your client. Never pay firm expenses directly from your IOLTA. So, this should be common practice, but your rent, your payroll, your software expense, anything that is a true firm expense, never take them from the IOLTA, never feel the need to borrow from it. And then, something else too is you never want to actually leave earned attorney's fees in your account either, just because as soon as those fees are earned, you want to document that. You want to make sure that the ledger showcases the fees have been earned. Perhaps you've had a retainer that's been sitting out in place. You can document that, a portion of that retainer has now been billed for the attorney, right? You want to immediately move those funds to the operating account. And then the other best practice when it comes to IOLTA is kind of talking about what I just mentioned about, earning attorney's fees and making sure that you move them in a timely fashion. Is just the overall timing of your deposits and withdrawals. So again, once client or third-party funds are received, make sure you timely deposit them into that account. The last thing you want to do is just let the settlement fund sit on your desk, or let the retainer fund just have a check that sits on your desk. You want to make sure that you are documenting and promptly depositing funds as well as withdrawing them once those fees are incurred or once that settlement post. We already talked about this earlier too, but again, make sure that deposited funds have cleared first prior to dispersing. So when you're looking at your online banking, look at your collected balance in your online bank. Typically, you'll see available balance and collected. The available balance will usually show a higher amount right away if you post a check or you just send one through your deposit scanner or mobile deposit. The collected balance is actually the amount that you should be going off of, because as I said earlier, that's the amount that dictates it's cleared from the sending bank. Your receiving bank has also received it and cleared on their end as well. There is no float and there is no circumstance where you may be accidentally dispersing funds prior to them actually settling, and therefore you've just essentially commingled funds with another firm's client with the other. So, as a best practice, I typically tell people treat client funds like a separate sub account within the IOLTA. And that's actually something that we at Pinnacle have kind of worked with attorneys to help develop. And there's various accounting softwares that are out there as well that you can utilize to make sure that from like a reconciliation standpoint, you're not ever using other clients' funds for different client reasons and things like that. So on the ethical consideration side, we've talked a lot about how you need to promptly put funds into the IOLTA and how the IOLTA effectively acts as a pooled account, making it so that you don't have to go in for every individual client of yours and set up a separate sub account. Well, you can still choose to do that. And it varies by jurisdiction, but common practice basically would suggest that the reason for setting up a separate account for that other client, not putting them into the IOLTA, is basically because the interest that they would stand to earn on the funds that they placed in that separate account is going to be greater than what it would cost to actually set up that separate account. So by nature of setting up a separate attorney trust account or basically just deposit account in the name of your respective client, instead of all the interest that is earned going to the state bar, well, that account or those funds are not a part of the IOLTA, thus all the interest earned goes to your client. So again, every attorney is going to have to decide like, hey, if these funds are only going to be around for a short-term amount of time, they're nominal in amount, it's probably best just to go ahead and put them into the IOLTA, save everyone some time and headache. However, let's say you have a large settlement come in for a client and it's $1 million and you expect the funds stick around for anywhere from 2 to 3 months while maybe there's medical liens that need to get resolved, maybe there's a divorce in the picture and you need to make sure that the ex-spouse is going to get their cut as well, or perhaps the client just wants to set up a trust and it's going to take time to do that. Well, instead of putting that $1 million into the IOLTA, contact your bank, set up a separate attorney trust account, and what they can do for you is basically pass all that interest through to your client. So while those funds are sitting around, your client gets to benefit some as well. And I mentioned that as a best practice, it's best whether the funds are in IOLTA or not to treat each account like a separate sub account within the IOLTA. We at Pinnacle have actually developed some kind of rather savvy software that we call our deposit escrow platform or our sub accounting platform. And on the right hand side are some screenshots of if you logged into your online banking at Pinnacle, you would see that this deposit escrow platform is just a part of the drop down menu in terms of treasury services. And then that bottom right screenshot is actually an overview, just summary of what you would see as the law firm, just kind of like your landing page, so to speak. But what our sub accounting platform allows you to do is open up these separate accounts that I mentioned in a matter of about 2 minutes or less. So we give you the power instead of having to contact us and provide us, X, Y, and Z info for your respective client. You have full access to this deposit escrow platform, this sub accounting platform, to effectively open up your own deposit accounts and separate accounts for your clients. So it's a little unique where, I mentioned IOLTAs were introduced, in the 80s. And, as I'm sure back in the 80s, opening up separate accounts was probably not that easy to do. It didn't take as little as 2 minutes. I'm sure it probably took, maybe 2 days was a good probably turnaround time. These days, you can do this a lot quicker. So what that allows you to do is just, that question around, hey, is this going to benefit my client from an interest standpoint? We give you a lot more power to really help your clients out, open up those separate accounts. And I've actually included a couple of YouTube links as well. You can go out and search on YouTube too, Pinnacle Deposit Escrow. It'll immediately pop up. You'll see a couple of 3 to 5 minute demos that just walk you through how the online banking platform works, coinciding with deposit escrow, and how you can open up these sub accounts, these attorney trust accounts for your clients when you deem necessary. And with that, Anthonia, I'll turn it back to you.
Thank you so much for that, Eric. Now I'm going to start getting into the day-to-day management of IOLTA accounts. And from the standpoint of being within the firm, whether you yourself as the attorney will be managing it, or perhaps you have staff that will be managing it. What I will like to mention here is that you're going to see and hear a lot of the points that Eric mentioned being repeated, but from a slightly different angle. This is coming from being inside the firm and ensuring that they're being managed correctly. So the first point here is daily transaction monitoring, balance verification, and record keeping. We can't stress enough how important it is for you to deposit things immediately, right? Once a deposit comes in, as soon as you receive it, deposit it as soon as possible. Also, on the back of that, confirm the source of funds, the client, and the matter associated with that deposit, and also the purpose of the funds, because you want to be able to understand if it's a retainer deposit that has been made, a settlement deposit, or an escrow, or something else. You want to make sure that your documentation is always crystal clear for your for your account, so that in the event that you need to go back and reconcile or look at something, you're able to quickly identify if there's something that could be perhaps just misfiled in the wrong place. Another key point here is to verify that checks and electronic transfers are properly credited. Eric touched on that a little bit before, making sure that something that's deposited into your account clears the account, and also ensuring that it's credited to the correct account. Best practices here, no fund should ever sit unrecorded or unidentified, because that just creates this room for error, for omissions, for things to be forgotten or lost. And then later on, the accounts are not matching up, they're not balancing out, they're not squaring out, and then you have an issue. Also, being sure to confirm that sufficient funds exist before processing a disbursement is key, because what you don't want to happen is that you disperse funds against money that's really not there. And then you have an issue where you're going to then be reported to your local state bar. Word of advice is to never rely solely on the bank balance, because you just don't know what's pending. You don't know what funds have cleared. If you have a good relationship with your banker, as Eric has stressed here, which is something that Pinnacle does, and one of the reasons why Strategy Academy has chosen Pinnacle Partners as one of our partners is because of that ability to have the relationship with your banker, where you can always pick up the phone, have that conversation to make sure that things are clear, to get anything untangled that perhaps may not be adding up correctly on your inside documents with what is showing on the bank account. The next point is to maintain individual client ledgers. And this means that even if your client who's currently with you may have more than one matter, keep them separately as well. Keep separate ledgers for them, because what you don't want to happen is things start to get all mixed together. You're not sure what goes where. You want to keep a separate ledger, a separate running balance, and separate transaction history, so that you always know what is happening with clients, but more importantly, on the matter level, because in the event that a client comes and asks a question about a specific matter, you want to be able to quickly on your feet be able to respond and to give them the information that they need. Proper deposit procedures. Avoiding commingling is key. This perhaps will be something that we want you to take away, just this one piece. If you take away nothing else from this webinar and only this one thing, for us, we feel that more than half the battle is won. So avoid commingling as much as possible. No operating revenue into the trust account. Do not do that. That will cause you to get in all kinds of messes that you don't want to have to untangle after. And again, worst case, being reported to the state bar and having that ding against your name. So deposit retainers and settlement funds properly, right? Making sure that they're going in the proper accounts, that you're not putting things in the wrong place. Clearly labeling your deposits and your client matter information on your deposits are also key, because you want to always be able to go back to the documentation and being able to match deposits that come in and for which client and for which matter. So be very meticulous in how you're registering the stuff when it comes in, how you're recording it, how you're labeling it, so that everything matches together. And in the event that there's any misunderstanding at all, you're able to go back and reconcile and fix it rather quickly before it starts becoming an issue for you. Implementing disbursement controls are another day-to-day operation piece that you need to consider before releasing funds. Eric mentioned this as well previously. Fees must be earned. So don't assume that, hey, these fees need to be dispersed, so I'm just going to go ahead and write out a check for these funds. You have to make sure that the fees are earned before you start taking away from the retainer amount. Client authorization and settlement confirmation should be obtained. So whatever's happening with these accounts, be sure to keep your client involved. Get authorization from your client whenever a disbursement's happening. Keep that communication open, and that way you will reduce the chances of you being reported even by a client. Rule of thumb here is ledger needs to be updated first, not afterwards. If you keep the ledger updated, that is going to be your North Star that you go back to in the event that something seems off. You can always go back there and you will know what the transactions that are meant to go against that particular client's ledger are always up to date. And that way you don't have to guess or try to figure out what's happening. As soon as something happens that needs to be recorded against a ledger, do it first. Do it as soon as possible. And if you can do it daily, that is the best practice. I touched a little bit about this before, about client communication, notifying your clients when funds are received, whether it's funds that's be dispersed to them or clients sending funds into you to pay for, their legal fees. Keeping those lines of communications open it is very key, because if the client knows what's going on, they're not going to jump into reporting you to the bar without getting a clear understanding from you if they're in constant communication. Being ready to provide your client a detailed accounting record upon request is another key thing that you should consider, because in the event that your client's not understanding what's happening to their account, if you can quickly provide them with a line by line of what's happening to their account, again, that reduces any likelihood of you being reported to the bar. Sending clear settlement and trust disbursement statements are another part of communications with your client, and just being transparent, which reduces any disputes or grievances that could be filed. Handling earned fees. That is something, again, like I said before, there's going to be a lot of repetition here, but we're stressing the things that are most important. And Eric talked earlier about handling earned fees. I did as well. We recommend that you transfer earned fees from the trust account to the operating account promptly. So don't delay. Whenever the trigger happens, whatever your internal trigger is that requires this to happen, do it immediately. Never pay expenses directly from your trust unless permitted or properly allocated. So don't start thinking, and assuming, I should just take it right out of the trust account. Like, you have to ensure that what you're doing is permitted, and also that there are properly allocations that allow you to do that, right? And if in the event that there are going to be any transfers that happen, you have to be sure that you document this transfer to validate the reason for the transfer in the event that something comes up, because you need to be able to reference your documentation to show that there was authorization and good cause for you making that transfer. Lastly here, managing and reconciling of your accounts should be something, yes, that we encourage daily, but again, monthly as well. So daily you're looking at it, but then monthly you're doing a clean sweep and looking at things, looking at your bank statement, your trust account register, your client registers, totals, just making sure that everything adds up and everything balances across. In the event that you identify an issue, it's recommended that you stop, pause, and figure that out. Do not delay, because you don't want a domino effect to happen. And then the bank ends up, getting some type of alert that requires them to then report you to the state bar. Now, talking about best practices that we want you to take away. Implementation of integrated accounting software, perhaps with a practice management software, is highly recommended, because that allows everything to be seamless across both platforms. You get to bill your hours to see what your hours are. And then if your accounting software is able to capture that, because obviously that is a technology that's, constantly operating in the background. Of course, yes, you still have to do the human check, but because you have the software there, that's going to help you with that integration of the practice management system, ensure that things are coming across correctly, calculating correctly, and it's also, again, another layer of reassuring that you're doing things correctly. We also recommend that you restrict account access permission, meaning that you're not going to allow just anybody within the firm to do this, and also to to Eric's point, depending on what state you're in, is going to determine who's even allowed to have access to these accounts within your firm. So you also want to check what is allowed and is not allowed, but in any case, still restrict access permissions. Then automating alerts for low balances and irregular transaction is another good practice to incorporate into your systems. And that way, in the event that your bank account is getting kind of low, to avoid it getting to zero or going below zero, at least you would get an alert beforehand so that you can do something about that quickly. And also, whatever would be, I guess, classed as irregular transactions in your practice, try to figure out how you get the system to alert you to those things. On the back end of banking applications, as well as integrated accounting software applications, there are ways that you can put entries in there that will alert you that something is just not quite what you would want it to be going through that account. And that will be a flag to you, or perhaps to someone in your office, to have a look at what's going on and try to remedy whatever that issue is. Conducting internal spot audits regularly are another thing that we recommend to clients, simply because if you're spot checking, that's another layer of ensuring that you're not messing stuff up. It's also another opportunity for sets of eyes to be looking over what's being generated in your integrated accounting software system that's together with your practice management system, but also looking at what other members of your team are doing to ensure that the checks and balances are there, and anything that perhaps may have been missed can be picked up in this like internal spot checking and auditing that you're doing. Now, some practical tips that we would love for you to take away is, first off, treat IOLTA accounts like their client property, and that's because they are, right? If you mentally separate your IOLTA funds from firm money at all times, meaning that your IOLTA account is not the same as your operating account, that is the first rule that should be implemented within your firm for everybody to follow. That way, that there is some hesitation from the onset to even think about going to the IOLTA account for anything outside the purpose that it serves, right? So you're going to apply never using trust balances to solve any firm cash flow issues, even if it's temporary, because that is typically one area where attorneys mess up. They think, oh, I can temporarily get funds from the trust account to, kind of hold me over for some other issue that's happening. And that is a red flag that at any local state bar is totally against, and you should not implement that kind of policy or practice within your law practice. I'll also mention here that if you label your internal reports as client funds held in trust and not as account balance, that's another way to, keep things so crystal clear that nobody gets confused and start thinking that they can move things around in ways that they should not be moved. We mentioned before about depositing the same day. Posting transactions the same day is key. Recording deposits and disbursements immediately are what we recommend, because that just reduces any chances of things just getting placed in the wrong accounts or things being missed. Waiting even a few days just creates a reconciliation problem and a compliance risk that you just do not want to take. We also recommend that you always check the client ledger, not just the bank balance, because you just never know what's pending, what's happening there. You want to always check, double check, triple check if you can. Confirm that the individual client ledger has sufficient funds. Confirm that funds have cleared. Those are all a part of just ensuring that, it's not just your bank balance that you're going after. Instead, you're looking at your client ledger as well to make sure that everything is crystal clear. Now, as deposits come in, you want to wait for funds to clear before making disbursements. This is another thing that we want to stress here. Deposited checks and funds do not mean that they have cleared. Banks sometimes may show funds available before they're actually truly collected, and you don't want to start posting against that in the event that there's some issue. Perhaps money gets recalled. You just never know what could happen, and then you're the one that's in trouble because now you have done something that you shouldn't do. You're using one client's funds for the other client, so you don't want to run into those types of issues. I mentioned this before as well about using separate ledgers for every matter. So even if you have a client that has multiple matters with you, each matter should have its own separate ledger. This is to prevent any accidental overdrafts, any misapplied funds, audit confusions that could happen. Just keep everything separate and just keep your records super crystal clear. And just some final tips that I'm going to touch on briefly here in the interest of time. Reconciling regularly, which is what I mentioned before. Looking at your bank balance, your trust register, total of your client ledgers to ensure that everything is matching up. Standardizing an account process. I want to jump quickly to this because this is a 5-pronged rule of thumb that we recommend for our clients. The first thing that we say is identify the client matter, the client and the matter that you're going to be recording funds towards or against. So clearly identify that before you do anything. Then log the funds received. If funds are received, log it on that ledger right away. If the funds are meant to be going out, log it there as well quickly. Deposit the funds. If the funds come in, deposit them right away. Update the ledger, then notify the client that you've received it. If you keep this 5-step process as a rinse and repeat, as a standardized account management process, this typically keeps everything in order, and this consistency prevents any errors from happening. Again, touching on limiting who has access and training staff and attorneys. One essential personnel member should handle trust transactions, and a separate person should have responsibilities for, record keeping and another line of review. So if you're able to have at least those 2 lines of defense as at a minimum, that is helpful because you're able to have 2 separate pairs of eyes that are looking for any errors that could potentially exist. And then lastly here, document everything. We cannot stress that enough. You should document every single thing as much as possible, because in the event that a deposit comes in, you want to have the deposit confirmation. You want to have wire records, disbursement approvals, settlement statements. Think audit ready at all times, because you just never know what could happen. And with that, we are now going to open it up to some Q&A in the event that you have questions that you have for myself or Eric. Eric, I'm going to let you know if any questions come in.
That sounds good. Maybe while people are thinking about questions, I'll just touch on one of the comments you made, Anthonia, kind of at the beginning, where you mentioned it is important to make sure that your banker, you have contacts that are at your bank, especially when we're kind of considering like, hey, I'm looking at my online banking, I have 2 separate balances I'm seeing, or maybe my balance is matching up to the internal ledger. That's a circumstance where right away, as much as you want to internally try to run that down, no doubt, just make sure that you reach out to your local banker, whoever he or she may be, have them looking at that with you. That's something, there's a lot of advice and services that we offer at Pinnacle. And frankly, sometimes people ask me, what makes y'all so great? And my answer is as simple as we answer the phone. So you can always try to find a way to contact us. Sometimes getting you an answer is what really just kind of sets us apart from other banking institutions as well. But for example, about an hour or so before we got on this webinar, a client of mine who's a personal injury attorney, he let me know that they just had a large settlement come in. They have the check and they're going to submit it through their deposit scanner. But he gave me a heads up because, and again, all banks are different. Thresholds might be different, but many banks have hold limits where depending on the type of, a dollar amount that's coming in, when the amount comes in, it automatically triggers a hold on those funds, right? It could be a day, 3 days, a week. Again, it all depends on the bank and it depends on the size of the funds. In this case, your bank can work with you to probably tailor per client what those hold limits look like. But as a best practice, what my client does, whenever he has outlier settlements that are going to be large and maybe potentially would trigger any kind of hold to be put on it, he gives me a heads up. That way I'm aware of what these proceeds are and what they're for. And especially considering that at the end of the day, they are client funds. I don't want there to be any kind of holdup from our bank's end of making sure that those funds get to the client in proper time. He makes me aware that way when I see the deposit come in, if by some chance I get an email that says, hey, these funds have been placed on hold, do you want to clear it? It's an automatic yes. So again, I can't stress that enough. Make sure that you know your bank, you know your local bankers, and they can help you out with this.
Yep. Thanks for that, Eric. Because a lot of times, when you don't have that relationship and connection with a bank, that's typically when you run into issues because you can't get to somebody quickly. You perhaps may identify an issue that has been flagged in your system, and then you can't reach your banker. That's perhaps what puts you in this like really awkward and vulnerable situation where you end up allowing something to go through because you can't get in touch with somebody to stop what's happening from happening. So yeah, thanks for mentioning that because we advise clients to look for a bank where they're going to have a relationship. And for Pinnacle being our partners, we can't stress it more, the importance of having that. So yes, that's super duper important and could be, the difference between something going off the rails or not. Well, Eric, I don't see any questions in the chat, and we're right up on the hour right now. So, what I'm going to do is I am going to circulate the recording of the webinar to all who registered for the webinar. And thank you to everybody who was able to attend. We appreciate you being here. And if you have any questions, please feel free to reach out to myself or also to Eric to get more information. All right. Thanks, Eric, for joining, and we'll speak soon.
Absolutely. Thanks,
All right.
y'all.
Take care. All
Take
right.
care.
Bye.